what not to do when buying a home or when you are in escrow. Hi, my name is Mike Patel. I'm with First Team Real Estate right here in Anaheim Hills, Orange County. And I'm going to give you 5 pointers what not to do. And believe me, buyers do things and the escrow may fall out or the transaction may cancel or it may delay the closing. And number 5 is a great tip. So please be sure to watch tip number 5. So if you're in escrow or if you're thinking of buying a house, it's very important to understand why not to do the following things, because it does happen. Buyers get excited and they may do things that affects the qualification, that affects the points they may charge you, or it may eventually cancel this escrow. So let's start with point number 1. Is that please do not buy a car or major appliances when you are in escrow. When you buy a car, assuming you're paying a loan on it, not paying cash. So assuming you have a payment on the car, if you buy a car or large appliances, that's a payment, and that works against your debt ratio, which is the lenders look at all the debts that you have, your property tax, your loan payment, your credit card payments. You may have a car or another car in the family, and if you buy another car, let's say it's $500, $600, $700 a month payment, that adds to your debt. So your debt ratio increases, so your chances of qualifying goes down. So that may be a red flag. So the tip number 1, don't buy a car or any major purchases that affects your debt payment when you're in escrow. Tip number 2, while you're in escrow or when you are purchasing a home, is that do not open up new credit cards, or at the same time do not charge large sums of money in your credit card account. For example, you charge a vacation that you've been thinking about it. You might think, before we move into the house, let's go take a quick vacation, because you're going to be busy moving and remodeling, etc. So it is highly recommended that don't charge any large purchases on your credit card. Again, that adds to your debt and that reduces your qualification. I wanted to take a quick moment and thank you for visiting my channel and watching this video. While you're here, and if you're visiting me for the first time, please subscribe to my channel and also share or comment. I'd like to hear what you think about the videos that I do. So thanks for subscribing. Tip number 3, when you're in escrow, is do not co-sign for somebody. You yourself are getting a loan for a house purchase, whether it's a small loan or a big loan, and most buyers barely qualify. At least for the buyers that I've worked with, they have a hard time or just barely qualify because there's so many debts and property tax and insurance and interest payments and a car payment and maybe appliances, furniture payments. So when you co-sign, maybe your brother or a sister asked you to co-sign, or your buddy asked you to co-sign on a car they are purchasing or anything else, once you co-sign, you carry that debt. So if you co-sign, at the end of escrows, the lenders check your credit and all the debts that you have. So if that shows up, that adds to your debt ratio again. It's all about debt ratio. How much are you making? How much can you afford to pay on top of your principal and interest? So if you already have a cars and appliances and you add another car payment because you co-sign, that's a no-no because it's adding to your debt. So again, do not co-sign for anyone even if you want to. You can co-sign after close of escrow if you have to. By the way, I did a video a couple of weeks ago. It's called the First Time Buyer Tips. So if you're not in escrow and if you're thinking about buying, or if you know another buyer, please share this video. The link is right here. First Time Home Buyer Tips, and maybe you can help somebody out. So let's go to the next tip, which is do not make any large deposits. So obviously most of the home buyers, when they purchase a home, they're going to put a down payment, whether it's FHA loan 3.5% down, or on a conventional loan putting 5% down or 10% down, or maybe 20-30% down. So you cannot put a big down payment in a bank account while you're in escrow, because banks are going to check on where that money came from. So if you have a big amount coming from somebody and then you put it in the bank for your down payment, that's a no-no, because most lenders want that money in escrow, what we call in a seasoned account. That means, let's say you're buying a $500,000 house and you're putting 20% down. So you need a $100,000 down payment plus some additional cost, let's say $10,000. So you need $110,000. And let's say you only have $50,000 in your bank. And when you go into escrow, somebody gives you the money, or you have some money from wherever it came from, you put it in the bank to make up for the down payment. That's a red flag. The banks will not allow that because they're going to question and say, where did did that money come from? Did you borrow from somebody? Is it from some place I don't want to mention? But they don't like that, so they would like to see the money into your account, in your savings account or a checking account, at least 60 to 90 days. It varies with the lender. So that's a very critical thing. And if you do deposit that large amount, let's say your parents gave it to you, or your uncle or your friends or somebody gave it to you, they may require notification from them, or a letter that they provided that money to you, and they may call it a gift money. So your friends or family who gave you the money may want to write a letter showing that it's a gift money and you don't have to pay them back because it's a gift money. Because if you have to pay them back, then that's a debt ratio again. So it's all about debt, how much you owe when you're buying a house. So transferring large sums in your account while in escrow is a big no-no, just like the other tips I gave you. So let's go to the tip number 5. If you have a job, keep the job. Don't change jobs or your career while in escrow. You might be buying a house because you got a promotion and you have to move during the escrow, or you may be getting a higher payment at a different company. So you're thinking, hey, I'm closing my escrow on the 30th of the month. I'm going to start my new job. I'm excited on the 15th. That's a no-no, because they want to make sure that you have a stable job, and don't change your careers or your jobs, because that may affect your longevity in your job. In your new job, maybe you won't last for 90 days or you might be under probation. So it's better to have your job that you've had for a while. And if you have to change jobs or careers, wait till after you close your escrow and then do that. So hope these tips helped. Please subscribe. Just a reminder.